Hello everyone, welcome to today's live stream. I can take these headphones off. Hope everybody is doing really well. Again, I'd like to just give it a couple of minutes before we get going. Give everyone an opportunity to jump in if they so wish to do so. But yeah, we're going to be talking about the reaction from the US data. We've been kind of discussing whether we were going to get a hotter than expected outcome, and we have had that hotter than expected outcome. The dollar has strengthened off the back of that, and yeah, it's going to be interesting for the rest of the week. We've got unemployment claims and we've got Federal Reserve Chairman Powell coming up as well, so there's lots to kind of go through in terms of data and how the market is interpreting that data at the moment. And yeah, really interesting stuff. We actually had some data out of Canada that I haven't really looked into as well, so we're going to do a bit of a live reaction to that, and yeah, we'll go from there. So hello Andrea, hope you are well. Thanks for joining me today. Hi Vincent, I'm doing really well, thank you. Hope you are too. As always guys, if you have any sort of charts that you're taking a look at, any currency pairs that you're having a look at, any commodities, indexes, you know, anything that you want me to take a look at, then drop it in the comment section. And if you're new, hit that subscribe button. So let's head off into the news that's kind of come out recently, which is what we wanted to talk about today, which is that core retail sales data and retail sales month on month. We can see that they have technically sort of declined, but they came out hotter than expected. So we were expecting to see a 0.2% move or a 0.2% in the forecast. We didn't get that. We had a 0.6% instead. The core retail sales, and on the retail sales month on month, we were expected to come in at 0.3%, and we jumped above those expectations at 0.7. Hi, just for nothing. Hope you're good. Yeah, we'll cover gold definitely. So that was obviously really interesting data. Last week, obviously, we had some good US data as well, and we're starting to see a little bit of a sort of increase into the expectations in the US data. So it'd be interesting to see what Federal Reserve Chairman Powell says towards the end of the week on Thursday, just to see if they have sort of acknowledged this data and how they sort of see that panning out going forward. Obviously, the market is pricing in a little bit more of a hike, but only by 10 basis points at the moment. And, you know, we'll see how the Fed sees this, whether they just think that it's still okay to hold rates higher for longer rather than looking to hike again, or are they seeing this as a chance to try and get in front of the potential for an increase in inflation by hiking once more. We've also got some data out of the UK, which is really interesting. So average earnings index fell from 8.5% to 8.1%. So the pound had a little bit of an interesting morning. CPI year on year also expected to come in a little bit lower, but not as low as kind of what they were, I guess, expecting. What I mean by that is Bank of England really want this to be lower than 6.6%. So yeah, it'd be interesting to see how that comes out as well. CPI data out of Canada actually fell a little bit more. So we've got minus 0.1% there. Median CPI fell to 3.8%, and trim CPI year on year fell to 3.7%. So interesting data there out of Canada. Let's go have a quick look at dollar CAD actually, because CAD I imagine would have responded pretty poorly to that data, considering the fact that especially that CPI month on month miss wasn't to be as expected. So we'll jump on here as well and see what we've got, and then we'll jump over to some gold charts as well if this wants to catch up at the moment. I don't know what's going on with TradingView recently. It's not really performing very well, especially on the web-based app. Might have to download it direct to the computer. Give me 1 second. Here we go. It should be popping back in now. So let's head over to dollar CAD. So yeah, we've obviously had a spike in that dollar CAD price. If we just go to the hourly chart, you can see how price reacted to that data. We were trading down in sort of the 1.36s. We've now rallied all the way up into the 137 resistance up in here, which was the high that formed back on the 12th of October. So yeah, CAD weakening at this current moment in time, which was quite interesting because at the start of the week, we had a bit of a stronger CAD, and I was looking to see if that stronger CAD would continue. If we have a little look at sort of oil prices really quickly, they rebounded from that sort of $83 level. So I was looking to see if that would influence a little bit of CAD strength as well. Obviously, that data drop has affected the Canadian dollar, but there might be a sharp sort of opportunity for people to get in. Okay, so instead of trying to short dollar CAD in here, maybe that news has spiked it into a key level of resistance, and that may kind of fuel a move to the downside here for those looking to sort of buy CAD. So that's an interesting little thing to consider there. I like the fact that we've come up into that 137 and we're starting to get a bit of a rebound. Would dollar CAD be my sort of favored choice to trade? Probably not. There are some other charts around that look pretty good. One of those being Kiwi CAD. I actually like Kiwi CAD. I've got a sort of alert set on this, but Kiwi CAD is an interesting market, especially from both a technical and sort of strength and weakness perspective. You can see that we're kind of trading within this bearish trend here, or bearish channel for those that like to use channels. We actually came up into the 0.8200 level, which is something that we featured in a previous live stream, and we were looking to see how price would react, because you can see this sort of bearish channel has been in place since December last year. And it's performed really well in terms of every time it reaches the channel highs, we seem to get a strong rejection. Every time we come towards the channel lows, we seem to get a strong rejection. So it's definitely something that's in plain sight. It's obvious to see. So if price is going to stay within that, could we see a move down beyond the sort of lows here at 0.7950? And can we see maybe a move more towards the 0.78, or even these lows that formed back in October of 2022? So just want to keep your eyes on. That's for those who, I guess, do trade sort of cross pairs. I know some people may try and avoid that, but on the 4-hour chart, I like the idea of price coming potentially into this 8.080 level, these previous 4-hour highs. If we can get something into there, there might be a little bit of selling coming back into the market at that point. Or, we may just see price break to the downside there. But I like the idea of that market, just from a strength and weakness point of view. Let's float back up to the US dollar then. So because of that retail sales data, the dollar did have a slight rebound to the upside. We're starting to see a little bit more selling coming back in after that reaction. Price really struggling anywhere near 106.50 now, which is these previous sort of highs here. And yeah, it'd be interesting to see where price goes from here. A break above 106.50 would obviously be a sort of open door up to 107s, perhaps even to the 107.20s, which would be these kind of highs here that formed back at the start of this month. And yeah, I think if we break that, then it's going to move up to that 108. I still feel fairly confident. I feel fairly confident that the dollar will go and reach more towards that 108 handle. If we just take a quick look at the US 10-year yields, smashing through 4.8% at the moment. We were trying to find some support down here at the 4.5%, and we were kind of expecting maybe that price could come up towards the 5% level on our US 10-year yields. Obviously, when bond yields rally, we do tend to see the currency also rally as well. So there's an expectation here that if we do see a breach of that sort of 4.8, 4.9%, then we're going to head towards the 5%, maybe even up to 5.2s, which were these highs that formed back in 2007. So that would be a very, very interesting move, I think, from the market. It looks a little bit better on a monthly, sorry, if I just zoom in there. So that's why I'm also thinking there's a little bit of underlying strength in the US dollar at the moment. So although we're starting to see some kind of developments in terms of the market struggling to really, make a clear move to the downside this week so far, I still feel that every time we seem to get quite a decent rally in any kind of dollar related market at the moment, we are seeing that sort of strength come back in slightly, and it's been sort of reflected here on euro US dollar at the moment. So this was our sort of major level of interest that we were looking at recently. This was a large sort of level on a monthly volume profile that I showed you previously. The market's traded to the downside. We're just stuck at this level now. We're stuck at that sort of previous highs. Market's not really finding any buyers above that level at the moment. So if we fail to find some buyers here, then I think the next stop for euro US dollar is all the way back down towards this 104.60 low, just through there. But we'll have to wait and see, because at the moment it is a little bit choppy here. If I move this level up to here, which is that kind of previous high on the 16th of October, you can see price flush through that level. We've then come back below it, and then we're just kind of stuck here at the moment. So there's nothing sort of drastic going on here right now. Let's go flick over to gold then, because gold's a really interesting market. I did kind of a little video about gold yesterday when I was talking about the Aussie US dollar price. But yeah, gold rebounded quite aggressively from this 18.15, and the next level of interest for us was 18.87, and then after that, depending on how price reacted to that point, was up here at sort of the 19.45s, which it looks like it's heading towards at this current moment. And is this sort of being seen as, again, because of the sort of dollar data missing at the moment, is that inflation pressure, fear coming back into the markets? And are we seeing gold kind of develop from that point of view? Because the dollar's still been relatively strong, although it has given back some of its gains. It has still been relatively strong. So that move there, is that really backed by sort of the dollar weakness in the markets? I'm not 100% on that. So we'll see what happens. Price may want to try and trade up into 19.45 here on gold. If we have a little look at sort of percentage terms, in September we actually fell about 7% to the downside. We've now nearly recovered that move in October already. We've done about 6.5%. If you have a little look at that from a monthly point of view, you can see that that was September. October's really having a good comeback, and this 18.15 low seems to have been supported. Now, that was the low that formed here on a monthly chart between February and March of this year, and we've just come and tested those and found sort of buyers again, really strong buyers. So is this gold now heading back to $2,000? That's what we've got to ask ourselves. And if it is, how do we kind of get on the back of that move to potentially head towards the $2,000 level, maybe even the $2,050 level? So I quite like 1880s, this area down through here. The reason why I like that a lot is because obviously price rallied, it's kind of paused at this point and then rallied again. So I quite like the idea of potentially seeing price jump back to that level there, find some support and head towards 1945. Or if we kind of run towards 1945, if there's a consolidation and a breakout at that point, that could obviously be quite effective for a move up to 1982. So yeah, I quite like either of those ideas here on gold at the moment. I think that it's quite a interesting market to look at. And yeah, we'll see what happens. Obviously, we do have some data out of China coming up as well. I think that's industrial production. Yeah, year on year. That's expected to decline slightly. But obviously, any kind of misses there could also be a little bit of a sort of move for gold, essentially, either way. So 1880 I quite like. I'm actually going to just set an alert for myself around about that 1884 level, see if price can pull back towards that point. You can also argue the fact that you might get a large head and shoulders pattern. You know, people might be watching something like this, right? You know, I quite like the double top, double bottom pattern. You can see there, for instance, double bottom, price moves to the upside, you know, double top, price moves lower, double top. You know, I quite like those type of opportunities. So really speaking, I wouldn't mind seeing price back towards this level, because you've got kind of multiple things going on there. You've got potential right shoulder of a head and shoulders, if that's what you're into. You know, there could be a potential double bottom build up there if price came into it and did something like that. Let's have a little look at it from a fib situation. I don't usually trade with fibs, but I like to sort of just see where the fibs are, because again, you got to try and get into the mindset of other traders. What other traders looking at? And you can see the 61.8 there, literally just floating just above that 1880 point as well. So for all those traders combined, they could be looking for opportunities to see price come back to that point, to then look to long it, 127 extension, maybe even into the 161.8. So yeah, I think those traders will be watching that level very closely. If I look at it from a volume point of view, let's just bring in the fixed range volume profile tool. I might need to adjust this slightly because I was just doing a video about advanced supply and demand zones. So I probably need to make that more of like let's put 100. Okay, yeah. So around about, let me just zoom right in for you. You can see that the volume's picked up at that point, but the volume the most volume traded level through that area is around about 1871. So that zone just down through there, which basically covers that bearish candlestick, which is the one that we are sort of discussing at the moment. That is sort of where I'm looking at for the market to try and get back sort of bullish again on gold. You know, I don't really want to get long here. If I start to look at this and think I've got to start getting long now because I don't want to, I've got the fear of missing out of the move, then your risk reward ratio leaves, just from a risk management point of view, where you put in your stop loss that's in a safe place. You know, probably here, that's in a very vulnerable position. For the safest stop, you want to be below this volume zone through there. And, you know, look at that in terms of your return. It's just completely diminished at that point. So, yeah, I like to wait for price to kind of come back into these type of areas. And then I can look at potentially, you know, at what happens at price. You know, if it gets to there and it gives us an opportunity, then great. If it gets there and it doesn't, then, you know, no reason to get involved. But yeah, so that level there on gold would be interesting to me. If I just kind of cut all these back now, let's get rid of all these. That zone in there, around about 1880, is definitely something I'm interested in. Samuel, thanks for the information, sir. You're absolutely welcome. Justin, morning, John. Morning, Justin. Hope you're doing well. Yeah, let's move on to some other charts of interest then. So obviously we've covered the dollar index, we've covered the 10-year yields, we've covered dollar CAD already, we've covered gold. So we've covered quite a lot of charts already this morning. Let's see how the stock market is taking this retail news. We've obviously seen a little bit of a decline today. If we just go on the hourly chart, we'll be able to see how the market has been affected by that. Still fairly bearish here on the stock market. We've come up into a bit of a zone. I still quite like this zone down here. We obviously did get a little tap into it, but the volume level through this point is still around about 41.22 on the S&P 500. So if I was just to grab a volume profile and go from there to there, you can see that they've got this kind of volume zone through there where that consolidation is, and you can see around about 41.22, maybe just slightly above it. 41.27 is the most traded level through that point. So I still like the idea of price trying to make it down to this area. So yeah, I quite like that. Let me just have a quick look at we're on a weekly chart. So if I just put in sort of how this has been going on for the year so far, yeah, we can see that this is the current year profile for the S&P 500, and price traded outside of its current value and now has come back in and is testing the value area high of that. So when price, sort of auction market theory it's called, so AMT, when price kind of is in the value area, it can travel from one side of value to the other side of value. Okay, that's the kind of theory. If we breach value, then it will go try and find value elsewhere, which could be, you know, back towards these swing highs. If I was just to put on another volume profile and we just have a quick look at sort of last year's volumes, which is pretty much to here, yeah, we're kind of trying to breach these volumes as well, and the market is not really getting away from it too much. And you can see this kind of low volume pocket there, sort of around about that point. The market hasn't quite retested that, but essentially, yeah, we broke out of this value area. Price tried to seek value elsewhere and has come up a little bit short. Don't really usually look at sort of longer term volume profiles, but I always think, well, what if, you know, what if there's a huge level that we're missing out on, you know? But yeah, I quite like this 41.27 point. Yeah, can you look at cable? Yeah, absolutely. Let's go take a look at cable. I do quite like cable downside, to be honest. Let me just remove all the drawings. Let me get rid of this alert as well, and we can kind of go from there. Now, coming up this week, obviously there was a little bit of cable data, or pound data, and US dollar data. Average hourly earnings index fell in the UK, and we have got CPI coming up. We've also got retail sales coming up at the end of the week, but forecasts are showing lower on both. The dollar is the one that I'm looking at the most to kind of hit those misses, and because it's been doing so, I think that because of that dollar strength still, there may be a little bit more downside to come. I also quite like the fact that pound hasn't quite come into sort of this big area of support. So this is a weekly chart on the pound, and you know, I'm looking at this sort of 1900 area. Let me just type in the coordinates. Let's go with the quarter. Let's go with 1 spot 19 and a quarter. And yeah, I do quite like price potentially coming towards that point in here. We did look at the volume levels, obviously, in the past. We were looking to see if price could come into that volume level, and it has, and it did get an initial rejection. So this was the volume profile, which was around about 1 spot 2050, and that is pretty much where we got the rejection. Okay, the market doesn't seem to have followed through after that rejection, though. So you can see, if I just zoom right in on this weekly chart and just look at that candle in isolation, you can see the low of that candlestick was 1 spot 2037. So we only went slightly beyond that before seeing some buying coming back in. We haven't really maintained the sort of long here. I was looking to see if price held above this high at 122.60. I was kind of expecting price to stay above it, to potentially come up into 124, I think it was at the time. 124 was a pretty decent level on the market. Let me just type in 124 through there. And I basically got that level because I was looking at this pullback in here, and you can see this large sort of volume spike through there at 124. We obviously have another level above that as well, which is around about the 125, which is through that level. But obviously, price has to breach a volume level before it goes to another. So I was looking around here to see if once we breached sort of this high at 122.67 was the next point of interest, that volume point. And yeah, didn't quite get there. I think there's actually some, I don't know if it was the what data would have that been? I think there was some data out of the UK in the morning which basically just kind of pushed price to the downside. I can't remember what that data was. Let's have a little look. I think it was last week. That's not what I wanted to do. I want to go here. Okay, so it was pound GDP data basically, and then we had US core CPIs and things like that kind of push price to the downside there for cable. So yeah, we kind of didn't hold above that sort of 122.69s. We just kind of fell back below, and since then we've just kind of created a little bit more of a move down. Now if I look at this in kind of how I would look at this, or how I was looking at this, was we had a 4-hour high developing here, right? And I thought to myself, well, if price breaches this 4-hour high and the next real level is back up towards these highs, and we haven't done that. Price came into it a little bit more into the Asia session, end of the sort of US session, Asia session, and we just kind of rejected in here, and price has since kind of traveled to the downside here. I would like the idea of price coming back towards the 1.2050. We haven't really got anything in place in terms of, is there any kind of volume levels or anything down within that point? But that zone there, you can obviously see that we tried to breach that 1.2050. We rejected, we've rallied. So I wouldn't mind seeing price trying to retest that again to see if we can get some more sort of buying coming in. So really speaking, at the moment, the area to look out for is this high, all right, this sort of 122.16, just because I'm going to put that level in there as well. But because if we're capped at this level, then we should see some selling coming back in at that point. So if price tries to go for it again, you may get another rejection, which can lead to a bit of a move lower. We are finding a bit of support here, but it's not really strong support. You can see by the candles at the moment, buyers aren't really, screaming to get back in here right now. So, there could be an expectation that price starts to fall a little bit lower. Around 121 and below is where I'd be looking to sort of target that market to the downside. So yeah, I think a lot of people would have expected that as a sort of higher low and tried to maybe try and jump on anything, above 122s. I just don't see it at the moment. I see sort of pound being a little bit of a say weaker currency. It has shown some strength recently. If I bring in, let's see if I've got it here to hand. I've changed all my icons on my desktop, so I can't see where I've put my strength meter. Where is it? Currency strength meter. Right, so we'll just bring this over and just bring this up. We can see here from the currency strength meter that if I just zoom in a little bit, right, move it over, you can see that there was a couple of currencies that I was really interested in. Now, pound was obviously one of those. If we have a little look at pound here, the orange line, it came into the lows here. Anything kind of -5 and below is almost like a reversal for me. I'm looking to see if we start to see any kind of changes in that currency to kind of see if it will boost a little bit higher. Now, we did get that with cable last week, or pound, I should say, sorry. Pound did come from the -5s and was at the sort of -4s. By the end of last week, it's now sort of back at that sort of 0 area. So we've climbed quite a bit on pound. So to me, from a currency strength meter point of view, which it is lagging, so it's basically done on a week by week basis, but on the weekly basis, pound is showing some underlying strength, right? It's just not showing strength against the dollar, for instance. So one currency I quite liked it against was Kiwi, because Kiwi is the yellow line. Kiwi was above +5. Again, I kind of use this as like almost like a radar to say, well, what currency should I be focusing on? And it came up above that level, and you can see the weakness started to come in. So if I looked at pound Kiwi like a week, maybe 2 weeks ago, because pound was in that sort of area there for a potential opportunity, then that would have been a good market to look at, I think. Let's have a quick look. Let's see if the theory sort of stacks up there. So yeah, you can see, so this is a daily chart. If I look at a weekly chart, you can see a couple of weeks ago we found support at 2.0332, and then price has rallied. So I like to, what I'm trying to get to the point of is that although pound's showing that sort of underlying strength from that sort of weekly basis, it just might not be as strong as the US dollar at the moment. So yeah, so cable I still feel has that little bit more potential to come back towards the 121s, 1.2050s. It could be wrong if price finds support down in here and we do breach 122.16, then yeah, that bias is out the window, and price could potentially reach these highs again. So yeah, I do quite like that on cable at the moment. Aussie US dollar obviously talked about in the video yesterday, coming into this support at 0.63. Kiwi obviously showing a lot of weakness at the moment. A lot of downside in the New Zealand dollar, especially when it came back into that 60.50 level. We dropped quite a bit. Now let's go take a look at dollar yen. We are again approaching 150. Ever since we've sort of tested it, we've just been moving sideways, and today we've had a little bit more of a reaction. Obviously that data has come out and whatnot. So the market is potentially heading up towards that 150 handle again, and I have an alert set there because I want to see, do we get some kind of again intervention sort of volume coming in at that point? And if we do, how will that sort of affect the market? So dollar yen definitely still on the radar, just waiting to see what happens. Price is just very slow at this point. You might actually take until, I guess, Federal Reserve Chairman Powell says something on Thursday that may be hawkish for the dollar in some way. It could push dollar prices higher, could hit the 150, 151s, and then we could see that volume jump in. So yeah, definitely keep an eye on that one as well. For me, guys, I think that's all I've got to go through today, to be honest. Obviously, oil's been doing pretty well from that 83 level. Quite like that. I was looking at the VIX as well. VIX volatility index starting to increase a little bit, showing us that there's potential for, a little bit more risk off coming into the markets. We haven't quite seen it yet, though. The yen's still a fairly weak currency. Seeing it more reflected across the stock markets. So, yeah, I think I'm going to leave it there. Thank you for joining me for the live stream today, guys. I really appreciate all your comments and questions as usual. Thanks, Justin, for joining me. Thanks, Samuel. Thanks, Just Nothing, Vincent, Andrea. Thanks for all commenting today. If you could do me one favor, just leave this a like. I would really appreciate it. And yeah, I will catch you next time. Thank you, Raga, as well. Cheers. See you later, guys.